All right, so last week was actually a very interesting one for gold. We saw a lot of volatility across the market, especially with everything going on fundamentally. But what's important is how price actually delivered that on chart. There was so much sell off last week that nobody basically actually expected any of this. So now, instead of just doing a basic recap before we jump right into the weekly outlook, what I want to do in this video is to break down exactly how those moves formed, how those moves last week formed, and more importantly, how you could probably approach them using a high probability entry model that I use personally. This is one of my highest probability entry models that I use, because at the end of the day, it's not just about seeing moves after they happen, it's about understanding how to position yourself before and during those moves. So I'm going to walk you through how I break things down from the higher time frame down to the lower time frame and then into precise entries using last week's price action, so you can actually see how everything plays out in real market condition. And once we've gone through that, I'll also briefly touch on what I'm expecting going into this new week, because right now price is sitting at a very interesting area, and how it reacts here is going to determine the next move. So let's break down everything step by step and see what the market gives us. I'm Sale Nen, and I'll be your tutor for this video. So without any further ado, let's jump right into it. So let me load up my chart so we could start this. If you can see, this is my chart, and you could see that I've broken down everything properly, and you could see there was so much move before the week. Already the bearish sentiment started off since last upper week, and we saw last week actually cooking up in regards to that, and there was so much beautiful moves in regards to that. So I would love to first things first, I would want us to get a proper understanding of the particular entry model that I'm talking about here. I know there are some of you guys here that already might have watched the previous videos whereby I covered each and every one of these, and in this video I'll be breaking it down some more so we can actually get a proper understanding and what I've observed so far in regards to how the week actually played out. So stay to the end of this video so you could actually get the best understanding on how you could take advantage of this. So from what I have here, if you want, you could actually maybe pause the video to take a screenshot of this, or you could actually check the group on Telegram to actually get this particular image which is showing this. So I have this entry model that I use a lot, and I use it both on higher time frame and on lower time frame for entries or for confirmation towards how price could actually move. And the basic form to which this takes place is that there are times that you could see price reject, and in this particular case that I'm using for these two candles, that's the candles with the Fibonacci tool on, the case that I'm using here is most times where we tend to see this kind of candles whereby that they show some form of bearish reaction. Usually you would notice that the wick on top is usually longer than the one below, or the one below won't even have everything completely. So basically how you can take advantage of this, whether on the higher time frame or lower time frame, is that if price is sitting at a very key level on maybe let's say higher time frame or even on the lower time frame, what you do is you wait for price to close full body close above that wick. That's one candle should close with full body above the other end of the wick of the candle, and mark out that candle with your Fibonacci tool to mark out the 50% of that wick. Then you could actually easily take your bullish trade from 50% of that wick and your SL below it. This is how you take advantage of it. It's that simple. I cover other stuff more in depth on my course, which you could actually get more details on Telegram, but the entry model is that simple. This is how you take advantage of it, and you could easily position yourself with your entry here at 50% and your stop loss sitting right on the other end of the wick below, and you could actually target the next little bit higher or low. But then if price now, there's a scenario whereby instead of price to close full body above this particular week, what price will do is that price will come back to 50% of this week, because ideally what we should know with this kind of candle formation is that when we see stuff like this, actually an indication that price is actually trying to take into a bearish move, or trying to switch for bearish sentiments and stuff and all of that. Even total soups actually happen with this particular type of liquidity. So when we see something like this, And instead of price to close full body and invest this guy now, what we do is that you wait to see. Usually everything is about waiting. Patience is key in this. And even for this, patience is key because you need to wait for the full body close above the wick of the candle. And the same thing applies here. Before you take a bearish trade here with this, what you do is you wait for price to close full body below the other end. That is price failing to close above this particular wick right here to invalidate it, but rather closing below the wick. So easily when you mark this out on the, let's say, the higher time frame, for instance, when you go down to the lower time frame, you should see an entry which should support this downward movement. And if you're on lower time frame and you are taking something like this, easily you could even take your entries from this point on the chart. Basically something like this. On the higher time frame, you could set your trade at this point. Easily put your stop loss somewhere at this level, and you could easily chase the next relative low that you could have. And if you refine lower, you should even see something clear. But then there's an instance, and also remember, this is also vice versa. It also goes on the other side when we have a candle that is actually rejecting towards a bearish signal and all. So this is a key instance now that I want to cover in regards to what happened last week. Is this right here. This is our most important part here. So you should actually put this down. I would recommend you actually put this down. So what happens is that, let's say we have this scenario here whereby we have a bullish candle here, and instead of price to use it as ways to push up higher, price closed full body closed below 50% of the wick right here. Price came and tested it and sold off with it. If this happened on lower time frame right here, if you should go to higher time frame, you would tend to notice that this level right here is actually a key resistance level. So usually when you have resistance levels, what you actually expect is that if price is able to close above this level with full body close, now you can easily take your bullish trades now, because resistance has been converted to support. Now you could easily take your trade right here from the top of the reclaimed resistance level, which has been converted to be support. You take your trade and then you can easily target the upside. And if you notice here, I even indicated this right here to show that okay, it could move like that. But there's a key scenario that happens a whole lot, and it actually happens in a way so that they could actually trap out buyers at these particular levels. It's actually a way to fake out and trap buyers at this particular level. What price does is that price closes above, you see it with full body close above, then instead of price to hold this move, and usually most of the time it will actually test it to push, but then instead of price to take out this high and push up higher, what price will do is that price will still give a full body close below this low that picked orders from the resistance level, then close below the resistance level again and use it as a way and reclaim that resistance level as an entry for it to sell off. This is what a price actually does. And when price picks this, you would see a very strong reaction. This goes the same way either for, let's say, when a bullish kind of scenario and we saw a sell-off, and the same way they will trap out sellers at that point. So basically this is everything you need to know about the entry in regards to what happened last week. So if you want to apply it more, you could actually jot or take note of what I've said. You could rewind as much as you want so that you could actually get ready towards how it could actually happen another way. But for this video, I'll only be covering towards what happened last week. So let's jump right into the chart now so everybody could see. So let's go up to the daily time frame. What I would want to do is first start from the daily time frame. When we go up to the 1 day time frame, you tend to notice that for over a while now, I've been talking about this a lot. That's this daily bullish trend line that we've been moving on a lot. So what happened was that, if you notice what happened from this point, I was actually also looking for buys from the time that price was actually falling off to pick bullish orders from filling this FVG here. But notice what happened. Price came and tapped into this FVG, but then at the same time you tend to notice that there was a break of structure at this point, because this low right here was sitting at the level whereby it had already picked up orders from this region here. So there was a break of structure at this level, and you could see we still had another FVG sitting at this point. So a full candle close that will close below this particular FVG here would automatically convert this guy to be an IFVG, meaning that if price should react from this level and push towards coming back into this entry region, we would have a very negative reaction. And the only way that price will be able to push up higher is if it's able to close full body close above this particular inversion to push up higher. And notice what happened. This same where this inversion is actually sitting at is actually another, is actually pretty sitting well at a good premium level. And when we mark that out, you could easily see it here. Can you see price is actually sitting at a very key premium level? And if you notice what happened with that particular week, price actually came into that IFVG and sold off with it. Let's go down to the 4-hour time frame. So if you notice, I actually marked out the IFVG right there, but I did that to save us time, so we won't have to make this video very long. So notice what happened now when we come down to this level. Notice what happened. You could see it here. You could see this key rejection, this candle that rejected from this level here, exactly as I showed you guys from the entry model and all of that. And you could also see this FVG sitting at this point. And notice we had some form of reaction from this particular level, and price sold off, and price went as close as tapping the other end of the wick of the candle, but it did not, and it sold off aggressively and came down to this level. Then what did we see next? We saw price giving a full body close above this particular candle, and if you notice, we had the resistance at this point because there was this breaker block too sitting at this level that was invalidated completely, and price came out, was rejecting from that level. Notice what happened. Now ideally what you need to do is, from this level, is that with the full body close above this guy now, the resistance level now has actually been converted to be a support. But notice what happened. Let's go down a bit lower to 1 hour time frame so you guys could actually see what happened right there. Notice what happened. You can see the resistance level that was converted to support, and once price tapped into it, we saw a solid reaction from that level. But guess what happened? Next thing, it reacted but failed to take out this high, came back below the resistance level again and reclaimed that level. And you could see this is a beautiful example of a change in service delivery, a failure swing and all of that. If you trade any of those, you actually understand what I'm saying. And you could see a very solid entry that we actually used to target the other end of this low, which price was failing to touch it. Can you see how beautiful this is? And if we should go up to the daily time frame again, I want us to take note of something. When we go up to the daily time frame again, you could see that at this point we had our daily bullish trend line level, whereby we saw price falling, taking out this low and tapping on that particular point. Let's go down to the 1 hour time frame again. When we go down to 1 hour time frame, we could see that we still had that, sorry, my network is kind of laggy. Okay, thank you, we're back again. And when we come back down to that level again, you could tend to notice that when price tapped on that bullish trend line, we could see the reaction. Price was failing to break it and it was holding. This was Monday and this was still Tuesday. Price was still holding it. It was down to Wednesday that price was able to break it. But what the question is, what actually happened at that point? This was actually where price closed. And if you actually followed the last weekly outlook video, I was actually talking about the possibility that if the market actually opens from this level and we see a full body close above this week here, can you see? This is exactly what I showed in that particular illustration above before we started this video properly. If price close full body close above, there's nothing that will stop price from picking this 50% right here to push up higher. But notice what happened. Instead of that to happen now, we saw price opening okay, this was actually before the open. I think this was before the open. This was on Sunday. It was Sunday. Yeah, already this was late Friday. So price already gave a full body close below this particular candle. What did I see from that point? How do you take your entry? You usually mark it out from this point right here, below the candle right here, and you get your sweet spot there. And if we should even take our Fibonacci tool and we mark from this high to the point whereby price give a full body close below that candle at that level, you notice that this whole thing that was going on at this level did not even tap into the premium level. The premium level was sitting at our entry level. And if you marked your entry from that point, you know that already you are actually targeting the fact that price would break out of this trend line. And if price is breaking out of the trend line, you could actually chase let's say you could probably chase the midpoint of the trend line on the daily time frame, because this trend line is particularly on the daily time frame. Or you could actually, if you're aggressive, you could actually chase the other end of the candle. It could be that huge. Well, I guess nobody's actually expecting that price would actually sell that much, but that is how it should be done. So you could see easily you could actually mark this out. And if we should even look at something at this point here, let's zoom out a bit. You could notice that we had a very bullish would I say a bullish POI still at this level right here, a bullish support level here. But then notice what happened. Price had already closed below this level, but then when we came, price came to play around this level after picking our entry. You could see that price was giving a false hope that you could see this is the support. This particular target of this sell is where the support is sitting at. And after price picked ourselves at this point here, price still gave a very aggressive close here above that support level, trying to chicken buyers again as though it wants to at least wants to reclaim that level. But notice what happened. That same Monday, price still aggressively sold off that level. Then early Tuesday, something important actually happened. Something very important actually happened. From that sell-off late Monday that sold off after giving the fake out as though it wants to close above that level, we saw a tap back on the bullish trend line on daily time frame, and price bought up and gave a nice break of structure that then gave another break of structure that gave a full body close above that previous candle that gave the whole fake out. I don't know if you're getting me. So notice what happened. This is actually trying to show us as though price has given a it has given a very strong close above this particular guy. But notice what happened. With the comeback to the support level again, price failed to push up higher to take out this high. Guess what happened next? We saw a full body close below that level again. But now what makes this guy more valid at this point is the fact that now we had this low here that's actually gave a break of structure. So price giving a full body close below this level now gives us a very nice change of character, and you could easily mark your entry again at that support level. That support that was wanted to be reclaimed now has been converted to be a resistance again. And notice what happened. If we take at that level, you could easily target, let's say midpoint, but this is not midpoint. This is about quarter of the whole bullish trend line, and you could see price sold off aggressively. This is a good 8-hour trade. The first one was about 9-hour, and you could see the initial one that happened before last week too was about 7-hour. So this is actually a very, very good entry model, a very good entry system. And if we should go down to like 15 minutes, 5 minutes, we'll actually get to even see more. But I won't be doing that here. I'll actually be stopping on the 1 hour time frame. So let's notice what happened after price filled out about quarter of that bullish trend line on the daily time frame. We got to see a very aggressive rejection from that particular point that we took our profits from. And notice what happened from that level. There's something key that happened here. If you see that, I left an annotation at this level, key inversion level right here. Notice what happened. I'm supposed to see what happened here. It's very important. We saw an aggressive rejection, which ideally most buyers will start to actually chip in their buys because they start to feel that price is starting to switch for a bullish run. And this is actually the second I didn't cover this with the illustration, but this is actually something key towards those illustrations that I made up there. So what do you notice here? We saw our rejection candle here that was kind of indicating that price was still going to sell off, but then the next candle that followed up was give us a full body close above this particular guy. What do you do as a bullish trader now? As a trader that has seen some form of rejection now, a very nice rejection on the 1 hour time frame, and then seeing this additional confirmation, what you tend to do is you tend to mark out 50% of this week to take your trade. But immediately you did that, let's just practically do it so everybody could actually see it. You could actually easily do this. You could actually easily do this. I'm actually very excited about this video because if you actually pay attention to it, you would actually learn so much that could actually probably help your trading in some type of way. So you could actually easily keep your stop loss here, and probably let's say you're targeting the point where price broke out to sell some more at that level, which is actually a good 8-hour trade also. But notice what happened next time. We saw a huge candle that actually gave a full body close below your SL. I know probably when you saw this, you could actually be discouraged, not maybe take the repercussion of that trade, because probably you might even feel sometimes it could be psychological that you could start to feel that it was probably because your entry wasn't good or anything. It was not because your entry wasn't good or anything. It was because price actually was going to price actually switched up. I don't know if you're getting me. Price actually switched to actually chase for more sales, and that doesn't actually mean that your entry was actually bad or you're a bad trader or no. So after that switch up now, the same thing I said about the about that support failing. Now this guy now will turn to be used as a sharp resistance, and you can see what happened next. Easily put your entry at that point. Already it was tapped in on that same day with this particular candle that gave the sell off, but already you could easily take it at this point here. Mark your entry at that level, and you could chase, probably go for, let's say, 50% of the breakouts. You can take 50% of the breakout on a daily time frame. You could see another solid. This is actually about 10 now. That was how good it was. And most of this entry actually comes up as a way whereby price actually tries to trick retail traders, so that they could actually take losses. And you could see this was on Thursday, and that sell off. And when we came towards Friday, I think I actually caught one of these moves here on the lower time frame. But when we came towards Friday now, the same thing happened again. Another time again, we saw another rejection here with Thursday's close. And when we saw that rejection, price still gave a full body close above this particular week here, but failed to tap into it. Some early buyers would have been able to cut up the move here with maybe taking 50% of this week. And let's actually do it practically so that you guys could actually get to see that. Some early buyers would be able to chip in with that, and you could easily take your entry, something like this, and keep your stop loss at this point, trying to chase some form of retracement, probably chasing as far as this. But then the key thing here I want us to take away is that after this particular trade was picked at this level here, the next thing we tend to notice was another rejection happened at this level now. And this guy was actually trying to shake off a lot of buyers now that were trying to chip in. And after this rejection happened, we saw price buying off aggressively, giving a full body close above that particular candle here. But guess what happened next? Price came back for 50% of that guy again. And next thing we saw was, remember what I said, it's a game of patience. A buyer that is buying at this level now, you could even be the person that is buying at this level, because there are key scenarios whereby price is very bullish. Price will pick this and price will run, and you'll never see it coming back down again. Price will run like hell. It's not a bad trade. And this same thing here, right here, it's not, you won't say it's actually a bad trade. It's not a bad trade. It's actually a very solid entry. And you could see price picked it here. Price picked it, and you could actually be targeting as far as this. But then the next thing you saw was that instead of price to hold this level, we saw that price now. Remember, this is our support level here. This is our key support level here. We saw that same price giving a full body close below the low that picked your entry. Ideally, what you should do at this level is the same thing here. It's just a clear indication that those particular buys have failed. In fact, if you even go up to the 4 hours time frame, we should go up to the 4 hour time frame, you could notice what I said already about these candles. Sometimes all you need to understand is how these candles are forming and what they are doing. Once you're able to translate them, you will not actually have any issue on the markets, because you can actually use other stuff for just additional confluence. If you notice what happened, this bullish candle that rejected from this level taps into this FVG on the 4 hours time frame, and after I did that, the next candle that formed was a bearish candle that went so close to taking out the high of this particular candle, but then failed and sold off aggressively to close below this bullish candle here. What does that mean? That means that everything that was happening here already had turned out to be bearish. And if you see now, the next candle that formed actually adhered to our entry on the 1 hour time frame already. Can you imagine? That was how good that stuff actually happened. And that's actually exactly what happened there. Let's go down to the 1 hour time frame. All of this happened down towards Friday. So when we go down to the 1 hour time frame, that is what we see, and that's actually the concept behind why I actually called that particular trade at this particular level. I think we got to catch this on my VIP channel, also on the community channel also. I think we got to catch something like this too. So notice what happened. Price came back still for the 50% of this level, but instead of price to respect it, what did price do? We saw a full body close below this guy again. How do you take the entry? You easily mark from this particular low here, because already this should be your breakout block at this level. this should be your breakout block at this level, because we had the break of structure at this point, we had this our injection candle at this level, and we saw what happened, that price wasn't able to hold it. And this is what happened after the full body close. Price actually tapped into it again and started to sell off. And actually, I'm actually expecting that price should at least take out this particular week. I think there's a week on the daily time frame. Let's look at that quickly. There's a week on the daily time frame. See it right here. I'm actually expecting price to actually take this guy out. I'm not sure expecting price to take it out. I expected that if this guy was able to give us any form of reaction, it would be at probably 50% of it, but then 50% did not give any solid reaction. We saw the first reaction with the rejection on Thursday, but then it wasn't able to hold, and price still sold off on Friday, coming back down into it. So I'm actually expecting price to take that out. So basically, this is everything that you need to know in regards to this particular entry. I know this video is getting a bit long, but if you are following up, it's going to be to your advantage. If you are not, then that's actually on you. So without any further delay, let's jump right into the weekly outlook for the new week, so that we won't waste any time. So when we come to the weekly outlook, our weekly outlook is right here. When we come down to the weekly outlook, I want us to start on the 1 week time frame. Everything will just be so swift here for the weekly outlook. I've done everything already, just like we usually do. You could tend to notice that even on the weekly time frame, the same bullish trend line that we're moving on was still the same bullish trend line on the daily time frame, and price broke out of that level aggressively. This is very aggressive. Can you see that candle? That's like the biggest rejection, a bit the biggest, I would say the biggest, not rejection actually, because this guy is even more worse at this point, but this guy is like the hardest rejection that we've had in a very long while. And usually the way you should actually trade breakout to trend line is that most likely you could actually expect to see that probably price would actually be strong enough to push back to the point whereby it broke out of that level and use as way to sell off. But then price has been very, very bearish in some type of way. The war has actually been making things move in a very bearish manner, whereby we were all thinking that with the whole political stuff happening, it was actually going to push it higher, but it's actually selling off aggressively. So this is what we already see on the weekly time frame. You could see it's already indicating that price is bearish. So the main expectation, or the main way you usually try to take this kind of trades, is actually to look for entries from the point of the breakouts. But let me just mark it. Even the price has been very bearish, and I doubt that it could go back as high as that to pick that, but we can actually mark it out soon. So let's go down to the 1 day time frame. When we come back down to 1 day now, we can see that everything that's been happening is red. Everywhere is getting red and red and red. That's everything that we've been seeing. But then we tend to notice that we have an FVG sitting at this level here. Rather, energy sitting at this level here, which I would love to mark with something like this. Let me mark that out. So you could actually see we have an FVG sitting at that level. I won't be using it for anything major, but let's mark it out. So already, with what I'm saying from this level, my expectation already with the breakout was that with this first candle, I expected that price would actually pick the sales, but price actually kept on picking and going for those, flipping those supports, breaking those supports and flipping them for resistance. That's what price kept on doing, and that's why it failed to even pull back as high as this to pick entries. And the same thing happened when price broke this particular support at this level here. You can see it here, the same break. Price came back to pick it as a way to sell off, and that's exactly how we closed with our Friday right there. So let's go down to the 4 hours time frame. When we come back down to 4 hours time frame, what we tend to notice is that where this particular FVG from the daily time frame is sitting at a point whereby price already gave a break of structure, whereby if we take our flip tool, we could actually confirm that if we pull down to this low, we could see that price have tapped into the premium level again and it sold off, which is actually very, very valid. So with this now, what do I want to see? What I want to see is, I want to see this, one of the key levels whereby I'm very much interested in is this particular recent break of structure at this point here. And you could see we even have an FVG sitting at that level too. This is on the 4 hours time frame. What I'm actually interested in seeing is if we take our fifth tool and mark that this guy out, we could see that our premium level is sitting at around the midpoint of that particular FVG there. So what do I want to probably see with this information now? What I would want to see is I would want to see price pull back into this guy and sell off towards clearing the wick on the daily time frame and maybe pushing down as low as 4,300 $4,400 per ounce, selling down as low as that and pushing down towards those 300 region. So this is what I'm seeing on the 1 week time frame. But then if price is able to push up higher, price will most likely tap into that FVG level before we actually get a particular direction. But this is my key takeaway. This is actually what I'm actually putting an eye for, the major level that I'm actually watching out for, because most people would be expecting that it could be pushing up higher and trying to look for buys. That's one thing with bullish assets. Most times people keep being bullish with very bullish assets. That's one thing. If you're actually an investor who purchases stuff with stocks and all of that, you could actually do a lot of that. But then this is one thing you could actually keep in mind with this. So let's go down to the 1 hour time frame. I would love to actually conclude from the 1 hour time frame so we could actually get a clue of everything. So when we come back down to the 1 hour time frame, we could see this everything is actually aligning to what already we've spoken about and what particularly happened at this particular level and why we had the sell-off. But then the key thing about this particular entry from what we saw on the 4 hours time frame, whereby we are looking for something like this, is the fact that if we take our fib tool and mark from this high here down to this low here, we'll tend to notice that price did not tap into a premium level before it sold off. It did not tap into it, and this is actually one of the key reasons why this guy is actually a sweet spot. And you could notice, remember what I said about this level, our support was sitting around here for a bullish one, but then price gave a full body close below that low. The next thing broke below that support level, so meaning that this guy is actually a key resistance level. This level is actually a key resistance level because even after that break of structure, price still reacted from that level to pick trades by filling this FVG before selling off. So I expect price to actually come into this guy to pick up our sell orders before we use it as a way to sell off. This is actually what I'm actually expecting from the daily time frame, and it will actually take something of this nature because still we could see that price actually is holding up to this particular breaker block at this level. So we could actually get to see something like this, something of this nature, tap into this guy, reclaim this level, and then we can sell off like this, something of this nature. Could see something of this nature. So this is one thing I'm actually looking out for. And if we should go a bit lower, but then also we need to put it at the back of our minds that it's very possible that with this retracement, price could retrace back into this level and still sell off completely, because already remember this guy right here is pushing price down. So there's a tendency that if we see confirmation from this region, we should be able to sell off with it. And the reason why I'm saying this is because if we should even go down to about, let's say 30 minutes and 15 minutes, if we should go down to 30 minutes and 15 minutes, we tend to see the similar stuff happen there again. Full body close above this level, we saw a reaction from that point, but next thing we saw was a full body close below that low. So most likely sell orders are really loaded at this particular level, so we should tend to see some kind of retracement. But then also, if we should go down to 15 minutes and I think go down to 5 minutes, if what I'm actually expecting or looking for is that we can actually get some little lower time frames class scalp, maybe 5 to 3 RR, or maybe about 3 hours. But if we should see something like this, we could actually use as a way to push into this level to look for ourselves. And if these levels fail to hold, then we could actually extend our targets towards falling into our next key resistance level for our sell-off. But then it's also a game of patience. But if price fails to even give that full body close, I mean this particular break above this high, what we could see is probably price may just continue doing something like this, and it may sell off. There's a high chance it may just sell off from this level, but then I expect it to actually pick more orders from the premium level before it does that. So basically, this is our plan for the new week, and I'll be dropping more info on the Telegram channel, more entry levels and other classification of how we should actually approach the market. So if you're not part of that channel, you should actually use the link in the description to join up. You could actually get more information that you're looking for on my Twitter. All the links are in the description. So I'll see you guys in the next one. Thank you for watching, and I love you all.